I'm Martin from Robalyst. You're listening to Stocks Decoded. It took a couple of decades for Warren Buffett to understand what Apple does, at least from his perspective. And one thing Apple does on industrial scale is buying back its own shares, which is something Warren, in fact, understands very well. In some way, Apple is actually paying Mr. Buffett to own its shares, and interestingly, with every share repurchase, he ends up owning more and more of Apple's stock. Still, some people keep saying that Warren Buffett is not a great investor. Fun left behind, let's have a quick reality check from Apple's first quarter of 2020. Revenues were essentially flat, increasing 0.5% thanks to strong services sales. Operating income decreased 4.2% because the companies continued investing in R&D. Both processes were a significant positive for Apple. iPhone sales decreased 6.8%, hit by weak US. At the same time, services were boosted by a 30% rise in third-party subscriptions. The two processes are in fact a negative for the company. Europe reported a nice 9.5% increase on the back of reduction in iPhone channel inventory. This was not positive for future European iPhone sales. Apple's results in the first few weeks of COVID were ambiguous, with several significant positive and several negative processes. Two important things were worth mentioning, one being that Apple's service growth continued to decelerate, and the other that the company was hit harder by COVID than its peers. There is a new way to learn about stocks, markets, trading, and companies. Now you can access it at www.robalyst.com. Thank you for listening.